It's been an action-packed week here already at Bitcoin 2025. Welcome back to the Bitcoin economy here by BlockFuel. I got James Seyffart from Bloomberg Intelligence with me. James, thanks for stopping by.
Happy to be here. It's a crazy area to even be doing this. It's pretty loud around here, but if you can hear the environment and how loud and excited people are.
No, absolutely. We had the mayor of New York here. We just had an NBA player walk by. It's been Brock was around earlier. Saw that. What are you guys working on over at Bloomberg Intelligence? Latest in ETF space, all of that stuff.
Yeah, in March, I was writing about, worried about the outflows from the Bitcoin ETF. So I was covering that, and I was like, a lot of this is from unwinding the basis trade, right?
You remember that.
Yeah, so I believe that call was correct because the corresponding decrease in outstanding and things like that, open interest. But right now, the most questions we're getting are what asset is going to get into an ETF wrapper next? What's going to get approved by the SEC? When are we going to see in-kind redemption, which retail people, it doesn't really matter for the most part.
But you are a person on the retail side. For tax purposes, it does matter.
Well, for the most part, not really, because you still can't actually it's only the authorized participants, so the big banks and big institutions that can actually take advantage of those in-kind transactions. If you're just a normal retail person, you're not going to be able to do that. So it will make the trading and efficiency of the ETFs in general more efficient, but also already extremely efficient. Like Jane Street, your Virtus, your Citadels, anyone else trading these things, the spreads are so tight in the vast majority of these ETFs, you might see some improvement, but it's not that big of a deal. It's just going to make things easier for people on the back end of the plumbing that when you push buy on something like an ETF, you don't know what the hell's going in the back end. You don't know what a transfer agent is. You don't know what the custodian's doing. You don't know any of this. It's just going to make their jobs a little bit easier.
Yeah, actually, that's a great point. I think of when the ETFs first came out, it was always, the ETFs are going to destroy this or destroy that. I think people have made kind of a bigger deal out of the ETFs launching than it needed to be. More like the fear kind of, this is going to change everything. Because I think there's a demographic that goes to the ETFs, and then there's a demographic that wants, obviously, the native holding actual Bitcoin.
Yeah, I'm scared for the wrong reasons. Not like having an ETF is going to change the way that the underlying Bitcoin blockchain is affected. It's not affecting the protocol. It's a decentralized network. Anyone can access it as long as you follow the protocol rules.
But coming back, really quick, the one thing that's been hilarious to me is if you go back and look at why Bitcoin started out of 2008, it was to get away from the current financial structure. And look where we are. We're right back.
Yeah, there's a little bit of that of your keys, not your coins, getting away from the big institutions like BlackRock, which has the largest fund in the world, getting away from the banks that are trading and custodying some of these assets and things, these ETFs themselves. But at the end of the day, this is also always part of the end game. I've been talking about Bitcoin ETFs back in 2012 on the forums and stuff, right? So this was always being talked about. It was always that basically Bitcoin is infiltrating TradFi. Maybe it's a little bit going in both directions, but it's more so the latter. And people always talk about governments, Bitcoin, hyper-Bitcoinization, not necessarily a full-blown believer of coinization, but if it was going to happen, the banks, the governments, they were going to have to get on board with the protocol. And it's not like these guys are changing the protocol, right? So at the end of the day, I believe in free markets. I believe people are going to choose what's most efficient for them. And for many people, an ETF is just way simpler. I know people who are very early to Bitcoin and have sold some of their spot Bitcoin and bought the ETF just because it's easier for planning purposes, dealing with their advisors, get everything under one umbrella. Is everyone doing that? No, not necessarily. I'm sure plenty of people that did that still kept some hard Bitcoin in a cold wallet or something like that. But it's just, people always underestimate convenience when they're doing something. Convenience is huge. This happens in the ETF industry. People just don't understand. People are willing to pay for package trades for other people to take care of those risks for them.
Well, yeah, and it's also, you have the younger generation, which is very, I would say, want that real-time, they want real-time gains. It has to happen now. And then there's the older generation. I would think that the older generation is really more into the ETFs. And the biggest market that people have had the hardest time with, I had some experience with this, is on the RIA side. So what have the ETFs done for the RIA space that I think you were talking a little, you've seen on that?
Yeah, on your first comment about the age-related stuff, again, people are them how to hold their own coins. The really like big maxi crowd.
People are very good at organizing things.
Dude, my parents have a hard time remembering passwords for like. I mean, the argument would be like you're storing tens or hundreds of thousands of dollars, you'll figure out how to do it. But at the same time, like people in their 60s are like they don't really know how to use computers all that well. Like you're not going to be storing their own coins. They will gladly pay a fee for somebody else to do that, or they'll pay an advisor to take care of it for them. But even like the other part of this is like you're an institution. Again, you might believe in not your keys, not your coins, but as an institution, you can't just be some dude at an endowment or a pension that's holding the keys for like dollars worth of Bitcoin, right? Like, you want to outsource that. You want to institutionalize it. And that's something that the Bitcoin crowd never fully got around these ETFs.
100%.
Yeah, you are an institution. You do not want to be the guy controlling that. As far as RIAs go, RIAs are the biggest users of ETFs in the US world. For the most part, a lot of them at these big platforms, these wirehouses, the users of the world, the JP Morgans, the Merrill Lynches, the LP, Raymond James, they control trillions of dollars of wealth. For the most part, they're only just now coming online. And in most cases, there's a lot of restrictions. Like you think, oh, you get an ETF, all of a sudden everyone can invest in it.
Nope.
That is not how these platforms work. You're
allowed a certain amount of funds, and it usually goes with their funds. So if it's an LPL, you get to use certain LPL funds. If it's a Raymond James, et cetera, et cetera. And then, being said, though, I think you're starting to hear, though, that people are starting to be able to venture into it. And do you think we'll continue to see that, or what do you think?
Yeah, the biggest bull case for the ETFs has been the unlocking of RIAs in 2025, and that's something I was talking about 6-7 months ago, even. Now, there's like, think about it as there's more than 3 tiers, but like I think about it 3 tiers, almost like red, yellow, green. Red light is, I don't care what you're doing. On our platform, you cannot touch a Bitcoin ETF or any of these ETFs. Then a lot of ETFs are in this middle ground where it's like, if the client specifically asks to buy a Bitcoin ETF, you can do it for them. Or if you clients like certain levels of wealth and risk ability to take risks and desire to take risk, they have a certain amount of assets with us, then you can buy some of the Bitcoin ETFs for them. And this is called solicited versus unsolicited. So if you come to me, I'm your RA, you ask for it, then I can do it. But I can't be like, I think you should put 2% of your portfolio in Bitcoin. The final level is when it's solicited, and I can basically solicit to you and say, I think you should put this in your portfolio. Right now, the vast majority of the assets are in that middle ground. Or actually, a lot of them are still red.
And the vast majority is independent RIAs versus wirehouse, because independent, obviously, you have more flexibility, but it also comes with that liability of now if you're deciding where someone's, because most people don't understand, like we could get into a deep conversation, but most people don't even understand that most RIAs, they're not even the ones making the decision at the end of the day. They're aggregators. They're bringing the funds in. That's all they're doing. And then you have the people at top, they're actually coming up with the models, and they just apply the models to those funds or to those assets.
Yeah, it all comes back. So the independent RIAs, the ones you were just talking about, they were the early adopters. The Bitcoin ETFs came out. They don't have to wait for a due diligence team of like a bunch of people sitting in New York where you're wasted to figure out whether you can buy this. Usually it can take 2 to 3 years before an ETF gets approved. You're an independent RIA. You can just buy for your clients what you think is viable as long as you can defend it for whatever you're doing. So they're the early adopters. But again, there's still trillions of dollars of assets in those wirehouses, in those wealth platforms you were talking about that are either at the red or yellow level. And we're seeing an unlocking of more people going up that ladder towards allowing things to be approved for buying of the end investors. And I think that's the biggest unlocking potential for the Bitcoin ETFs. And we've seen a lot of flows coming in these ETFs. And I think when we get the 13F report from June 30th, which we'll get in August, we'll see a lot more RIAs that have come online and buying this for their clients.
No, that does seem like the theme. So, James, we're going to have to bring you back on. I definitely want to bring you on with the ETF issuers. Have a little, I told them a little battle it out, see, no arguing, because everybody's got different, opinions. But that said, where do they go?
Yeah, I mean, if you have a Bloomberg terminal, that's where all my stuff is written. But most people don't have a Bloomberg terminal. So JSEYFF, Seyffart on Twitter. I'm pretty active on there. I post pretty frequently. I almost post way more about crypto than I do my day job stuff because this isn't my full job in this space. But yeah, JFF on Twitter is the easiest way. And I'm also a co-host of the Unchained. We do a podcast for Bits and Bips. So.
Oh, that's fantastic. That's good to know. James, thanks for coming on.
Thanks for having me.
We'll definitely have you back.